Bailey, there's a report here that ARM is set to price its IPO at $52 a share.
Yeah, so that'll be $1 higher than the range they initially laid out, but we had been reporting that along with other competitors that this kind of was expected. They had an oversubscribed book, only floating a small pool of the shares, bringing on a kind of entourage of banks, if you will, more than 25, I think 29. So really kind of pricing where many were maybe expecting, just given a lot of excitement, a lot of demand, especially when they hit the road pitching the AI story.
You mentioned only floating a small part of the shares from SoftBank, 10% only. Is SoftBank a forced seller here?
Force may be a strong word, but when I talk to some sources, whether they're lawyers or investors, they do see this as kind of a forced seller in the sense that SoftBank wants to retain that majority of the stake and be able to take out some loans on it. So using it to get a bit of leverage for some other investments. They also did buy back a quarter of the company from their own vision fund at a $64 billion valuation a few months ago. So a lot of complex math, if you will, but definitely the IPO that people are watching and talking about.
Yeah, everyone's talking about this, and it's going to get a lot of attention once it hits the secondary market. We know it's going to get a lot of attention, and partly that is because of the AI story. But I think the key word there is story. We don't necessarily hear the narrative coming out of ARM in the way that we hear coming out of an Nvidia or even an Alphabet or some of these other companies.
Yeah, so ARM is a chip designer, so they get paid by Nvidia. Nvidia is one of their largest customers for using their designs. They get paid in royalties and other fees, so they aren't necessarily kind of front and center like Nvidia, but they have been talking up those AI expectations.
Yeah, I mean, you got to sell it, baby. I mean, it don't matter, right? I mean, half the companies talking about how great their AI things aren't really making anything of significance.
Well, they're at least exposed to it. I mean, we've seen a number of companies talking about AI ambitions and streamlining operations, but this is actually a company that would benefit from a transition to AI, though the big concern from in the investment community, China exposure. They derive about a quarter of their revenue from China, so a lot of uncertainty around geopolitical worries.
Yeah, you mentioned Nvidia. I'm glad you mentioned that because there was a time when Nvidia was going to be the owner, the buyer of ARM, but that deal never came through. Now, Nvidia will be a big investor in the company, along with some of the other customers that ARM counts on. Yeah,
they lined up a number of what they're calling strategic investors to buy, call it $735 million of the IPO. One of the things we've been hearing from investors is that this is seen as not only a way to shore up expectations and get investors to maybe want to put money to work, but also to keep a number of these companies happy with having a stake in a company, because the big concern from when Nvidia tried to buy ARM was the idea that this could fall under the umbrella of one of its customers, as opposed to being kind of partly owned by the likes of an Apple or a Qualcomm.
So Instacart, Birkenstock, they both filed for IPOs as well. They're all watching. Everyone's watching how this ARM IPO kicks off and what trading looks like tomorrow. What are you hearing from sources when you talk to them about how this paves the way for more IPOs?
Well, the biggest thing is ARM can't miss. That's really been the thing from investors and bankers, is that they need to get this deal priced well and to trade well. That will set the stage, as you mentioned, for Instacart and Klaviyo to IPO next week, which another success, a string of success, could draw Birkenstock likely sometime early next month. And it's really just kind of getting the wheels churning, if you will, for a number of these companies based on how tight and kind of the lack of IPOs that we've seen since late 2021.
Are you getting the sense, though, based on the people you talk to, that the timing is right? Because there are some people that say that, you know, we're kind of in a different trend now, right? I mean, we've kind of had the hype around AI. People are now starting to look under the hood for more substance here. And if this company can't provide that substance, particularly when we get those first couple of big earnings reports out of them once they're public, then what happens?
Well, that's the big thing, and that's why I've not talked to anyone who's not optimistic about 2024. That's really what I'm hearing is when we'll see the bulk of deals, just because they want to see quality earnings from not only these companies, but also the market as a whole going into the end of this year, setting expectations early 2024 that can set the stage maybe for kind of a rush ahead of an election year, which typically we see stymieing that IPO window.
And just real quickly, too, we talk about, I mean, we had the other ones, Instacart, Birkenstock, a few others that could potentially come to market here. Is the demand there, I mean, in aggregate, right? I mean, we talk about this almost like there's just this finite amount of money sloshing around out there, but we know there are a lot of people still on the sidelines. brands. And even within the equity space, those that stay invested, they're being much more cautious about where they allocate.
Yeah, they're being cautious about where they allocate, and they want deals. So going back to that KKR study, they want nice discounts on buying into these companies. And the big thing that I've been hearing from bankers and investors is it's not necessarily a demand issue, it's a supply issue of companies not wanting to go public at those haircut valuations. You look at Instacart, they raised cash in 2021 at a $39 billion valuation. They're going to go public, at least on the high end of the current range, closer to $9.5 billion. So that's a big drop for some of those private investors wanting to get these companies out the door.